Good morning. Morning, everybody. Hope you're well. Happy, what day is it today? Tuesday? Jeez, I get mixed up being a trader. What day it is, what day it's not. Anyway, hope everybody's well. Let me know if I'm coming through okay. Thanks, guys. Martin, David Griffey, Martin, Dale Silver. Hope you guys are well. Just make sure I'm recording it. Yes. Okay. Let's get started. So today was, yesterday was a day where I kind of felt that you knew what was going to happen. You know, you felt that risk-off sentiment coming. You felt that yen kind of growing in strength. And from a trading-wise, I felt like a decent bit of money could have been made yesterday. I don't know whether you guys did. Obviously, my personal EA trade went quite well yesterday, but I did feel like there was some kind of... I felt like buying the yen, buying the Swiss against those commodities would have ended up making money. And that seemed to be the case. So... From a daily perspective, we're obviously broken structure here. We did last week, and we are underneath what we probably would now consider, our market structure. If I pull out to the weekly here, so it's interesting. Okay, this is interesting. Now we are only in Tuesday, so there's still a few days before this weekly candle does close. Now. Yes, I still have to have a downward bias, okay? Because the market's not told me that this wants to rise yet. You know, we have had a decent corrective, okay? I'm not the one, I personally don't have a bias that this is going to continue down and down and down. I don't have that bias. We've seen that before. Yes, okay, it could come down a little bit more, excuse me. It could go down a little bit more before we move to the upside because, you know, markets are historically long. But until I see that reason... You know, for example, on the 4-hour right now, we've got our hammer candle, so you're expecting some sort of pullback because of this decent impulse to the downside. You know, look for areas around this previous support, potentially becoming new resistance and continuation. That is what the technicals say, right? The technicals is still down. But how far we go will be interesting. So we've seen a little bit of buying pressure coming in. It's still, like I said, risk off. It's still in pullback mode. There's nothing here on the daily just yet. Obviously, we have just opened up in the day that tells me to buy this up yet. But I would just be a little bit wary that maybe we could be approaching the end if we do consider this our A, B, C down here. Continuation, possibly. I do think it probably has a little bit more to go, but I'm not going to go full-blown. This market is going to fall to the downside. We've had a decent fall. And I'll be waiting for the opportunity, i.e. like we got down here on the weekly, to buy up this market from an investing standpoint. So until I get that reason or that kind of shift in momentum, it still is risk off. Watch for that retest. But from investment standpoint, you know, we could be getting into nice territory for buying this market or this index on a dip. So yeah, risk off, pullback mode, watch for a reason to continuation short, essentially is what I'm saying. So I hope you guys have got your investment accounts opened up. I know a few people are asking me how I use it. If you are in the UAE, what could be a good option? Interactive brokers, getting an account set up with them. You know, what I'm hoping to do here is not only trading-wise, but kind of financial literacy, where we're wanting to put us in a good position for longer term, your longer term or your older self, where... you know, investing is certainly something you need to add to your repertoire. And opportunities like this don't come around often. And thinking about putting some money into there should certainly be on your mind. Okay, dollar is another interesting one. We've not had real follow through from that push yesterday in that DXY. We could be an interesting point right now in terms of London Open, where will we see a push or will we see a fall off? We can technically call this a breakout retest because we have broken out from the area. Okay, we're back to that 20. We've had some slight rejection here. Bias is still to the upside, although the daily chart doesn't look as nice as it did a few days ago. Bias would still be up, looking for, again, that reason to buy the dollar. If we do fall off and the market potentially does decide to have a little bit of push to the upside, maybe we could see a drop down in the dollar. But at the moment, I don't want to say that. As I said, I don't particularly like these last 2 days of price action in the DXY. I don't like the fact that we've broken through the highs. If we had this somewhere down here, i.e. consolidation within this large outside bullish engulfer, that would have been a bit better. So, yeah, bias is up, but let the market tell us. Let the market give us some real momentum, real push here. You know, potentially now in the next 4 or 8 hours. If it doesn't, then I could see this dropping off a little bit, possibly coming down to this area before we continue. But we'd have to see how price looks like at that point in time. So same with the SPX, same with the dollar, looking for that reason to continue that trend. Till then, pullback mode. Okay, let's have a look at EA since we're here. And I want to talk about New Zealand yen because I think it's quite a good learning thing for people who like the ABC. So EA, obviously going pretty well. The issue with EA is we know what the euro does like, and that's the climactic and a kind of fake back down to the downside, right? That's my worry with this trade. Still a long way to go. Still a long way to go. If the daily closes like this, you get a little bit worried. We are using this SAR, which should potentially help getting out of this trade with certainly, I would expect, at least a break even if we do decide to move quite swiftly to the downside here. But, the other option is if we are shifting from euro weakness, which it has been for quite some time, and the stocks decide to have another leg to the downside, you'd expect this to move back up. You know, possibly we could get a retest of this key zone, breakout retest before continuation. I do think pullback is on the cards on account of this 4-hour engulfer. Not a lot of, a little bit more volume coming into it. But like I said, we have had a decent run up. This cannot continue forever. And I think at the moment, yes, we could drop off because of what the euro characteristic is like. But at the moment, I think we still have to think about this until it looks a little bit more worrisome. So, yeah, for me, it's good. It'll just do what it needs to do. It's in now. All I need to do is wait for this dot, and what will be, will be. What will be, will be. Okay, before I get into watch list, let's look at New Zealand yen. So New Zealand yen was obviously one that I didn't get involved in yesterday. It was very close. It was probably about an hour away. For example, we've had this bar up here, let's say, as a proper breakout retest in my eyes, then I would have got involved in it. You know, selling the Kiwi, buying the yen yesterday certainly makes sense to me. And it did indeed move to the downside. Now, I don't trade this, but I think some people might like it, some people might not like it, but it's called the ABC 1-2. I'm sure a lot of you have heard me speak about it. So if I it's probably easier if I lose the 15-minute chart here. Okay, if I zoom out a little bit. There we go. Okay, so as we break out, right, we've broken out the area, the context is good. And we're completing this pullback in our ABC fashion, right? A, B, wait, hold on. A, B, C. Wait, am I doing that wrong? Sorry, guys. A, B, C. Apologies, brain fart. A, B, C, okay? So what we can sometimes add on to this pattern is what's called the 1-2. Now, the difference between an ABCDE, right, and an ABC 1-2 is if we look at price action, where we're saying 1-2 is here, 1-2, right, the range and the kind of impulsive nature of this price action is different to our initial corrective, right, just by looking at it. So if we're saying this corrective continues to a channel corrective, i.e. a DE, to make it easier, right, you kind of expect similar kind of impulses and pullbacks, let's say, within that corrective as we go along, which is slightly different to what we're looking for with 1-2. So obviously within the ABC, we've got multiple entries, okay? If we see this here, ABC, pullback, you've got your entry at C, you've got your break of B, and you've got your break of the highs, right? Those are your three pretty much standard entries. Once you add this 1-2 in, right, which is normally looks like this, there's another entry in here, which is a break of 1, and also potentially adding an entry here at 2. Okay, so if we look at this New Zealand yen, right, again, I'm just giving you the tools. I don't trade this. I know it. I know it's through technical theory. It's something that if you like, you can go and test. But there is an entry here at 1, right? So for here, so if you've identified this pullback, C wave, you see this push here, you can look at your order as a potential break of this area for continuation to the downside. Obviously that and a break of B wave It's very similar in this case. That's not always the case, but it's very similar in this one. So in terms of your entries, if you like the idea of trading a little bit more than I do, there's things you could look at, because obviously with this one here, even though I liked it to the downside, I didn't get an entry. But if you're saying, well, I can add a facet onto my breakout retest where I can look at, you know, a potential smaller term break of B, potential smaller term break of 1, then, you know, it could be something that you go in and test. And probably more common on these smaller time frames. As I said, this is the 15-minute, but it would be relevant on the 30 as well. So if we look at it here, we can actually see, although it's a little bit harder to see, we can see our 1-2 in here, and you'll be looking for a break underneath these lows for continuation to the downside. So I think just something quite interesting that I wanted to point out. As I said, I'm here to kind of give the tools that you can use if you do like. And the ABC 1-2, or obviously a break of B, is something that if you do resonate with, you can go and have a test. So New Zealand yen, obviously we missed that one. It has a decent 4-hour here, but you know I'm not in that trade, so that is by the by. Okay, watch list. Watch list today, Bitcoin. I'll go into your Bitcoin question as well, Martin, while I'm here. I think this is probably gone as well. I noticed this just prior to it breaking, with our confluence being our 4-hour kind of morning star here. Volume signature wasn't ideal, or our rejection around that 30K mark, right? That psychological, very big psychological level with Bitcoin. So you are expecting a reaction. You know, we are expecting a reaction. That doesn't mean at the moment that Bitcoin just continues and bounces off 30K and off we go back up to 100K, or off we go to the 100K mark, let's say, or up to the highs at 60, right? But depending on how this closes, there certainly was confluence with our head and shoulders idea, right? But I think this is obviously, I'm pretty sure this is gone, and I won't get a retest here. But the pattern was good, right? Pattern was good. Head and shoulder, obviously, and now breaking through. So let's have a look at your idea, Martin, because I don't think that'll come from me. So I took this trade in Bitcoin. You see the head and shoulders on the 30 and the 1 hour, but can you show us what your setup would be? Like where will your stop loss and TP would be based on higher time frames or levels? Because even though I see the formation, I also see a lot of supply to the left. Do you mean the head and shoulders? So if this set up, how would I trade that? So for me, if I was to trade it, I would need a retest here for continuation, right? 200 is not in the way, in which case my stop would be at the previous swing, looking for my catalyst movement to the upside. Is that what you're asking, Martin? Oh. Just confirm with me so I know I'm not answering the wrong question here. Yeah? Yeah, essentially that's what. So now, because it's gone, I can't get involved in it, right? And I'm pretty sure with how this looks, with the push we've had through this neckline or resistance zone, whatever you want to call it, same kind of thing to me. I don't think the retest would look very nice. Unless it turned into a complex, then possibly. But it's kind of gone a little bit too far. So really, if we're being very basic about it, right, you kind of want your retest to go into roughly around this area, come back before continuation, catalyst here on the 20, stop underneath previous swing, and play that to the upside. That's how I play the HNS on a 30-minute breakout retest. Right, obviously, if this was a 4-hour and I'm looking for a breakthrough, right, I probably wouldn't be, let's say this is a 4-hour chart, right? I wouldn't be taking that breakout. I would need, because of the extent of this pattern here and kind of the range of the pattern is kind of a smaller pattern, I would need 3 or 4 bars of accumulation prior to a break for me to take that as a breakout. In which case, if we did, it depends on what happens here. So if I get accumulation, right, but I get a wick here, which creates a anchor, then I can put my stop there. If I don't get that and we just kind of get rangy price action with no real anchor, I'd have to put my stop here and a breakout to the upside there. If that was a 4-hour or daily chart. That make sense? Did I answer that correctly? Anyway, good trade. Did you get? I looked at this. I don't have this wick, but I presume you hit your TP and now you're out of it, or now are you trailing it? Or are you fully out of it? 2 to 1. Well done. Excellent. Yeah, I mean, like I said, I mean, firstly, the 30K mark hit. I've been saying that for a while. There's times where I kind of doubted it, but we've hit that 30K. So I'm not buying it yet, by the way. Again, I'm very similar to the stock market. I'm waiting for that reason to enter. Just because it's hit it, I know that we obviously know it's a big area that's been hit a few times and it's held. That doesn't mean it has to hold this time. You know, so maybe we could see something, you know, a decent reaction. Yes, okay, we could push on and this may possibly start the uptrend in Bitcoin, which if it does, you maybe expect that to coincide with where the stock market is. If we do get that ABC, will a bit of risk on nature from a pullback completion help Bitcoin? I think so. You know, I think so. So this is why I think this week is certainly quite interesting in where we are. But at the moment, you have to say just reactionary support, right? And not a massive reaction. Not a massive reaction. You know, sometimes you'd expect this to really bounce off there. It's not done that yet. So let's see what it does. Let's see what it does. Okay, I've not even done my watch list yet, have I? Sorry. 15 minutes, I haven't even looked at what I was looking at. Bitcoin, EURUSD. So EURUSD is still on the cards. Might not come. Needs to kind of show me something now. In which case we could call this our, you know, head and shoulders here, complex corrective before we push to the downside. But it needs to show me something basically now, because if we continue in this vein a little bit more, the pattern is not really relevant for me, or it's not valid for me, because this section becomes too large for our initial basing V, if we want to call it that. Obviously, we can look at it this as well. So, yeah, I would just like this to go right now with where the DXY is. It depends on if we get that bullish momentum as London opens, but this needs to come down and give me something so I can continue with that trend. It may just be a case of, you know, possibly waiting for that 20 catch up on the daily. You know, maybe we do need a little bit more in here before EU decides to continue with that downtrend. Bias is obviously down, right? But we've seen it pull back. I mean, it pulled back more than the 20 here, gave us a little bit impulse and then continuation. Pull back to the 20 here. Maybe we're just waiting for the same thing. But path of least resistance is down. Could I see the euro having a little bit of a movement to the upside now, which means this context is invalidated? Yeah, I could see that, which is why I'm saying it needs to move. But EU is still on the list. I can watch it for potential shorts. As is the 2 pound pairs, pound Swiss and pound yen are still there. Again, with pound Swiss, we are able to look at our ABC because of the extent of this impulse. So we could look for an aggressive entry up in here, but ultimately still looking for the same thing of a break underneath this area. So the most pertinent thing on pound Swiss would be looking for a reason to go short, roughly at this C wave area, and your potential bar. You know, this would be lovely. This would be lovely. Something like that. Your inverted hammer, my favorite type of entry. To go short on the pound Swiss in that risk-off nature. And very similar to pound yen, where unfortunately with the 4 hour, I kind of wanted this to come down and really tag the area. So it's not done that yet. So the 4 hour perspective is not quite there unless we get a real tag of that zone, right? I.e. first structure, second structure, would need a little bit more there to digest this one before I look at taking a break short. But it potentially is there on the daily a little bit closer. Just need a real tag of this area before I'm able to take it, i.e. reducing the significance of that zone, because for the newer folks out there, what I'm essentially looking at, it sounds so simple, cup with handle, it sounds very basic, head and shoulders, but what we're essentially looking for is obviously that squeeze into the zone, right? Dow theory, higher lows into the area, reducing the significance, because if we think about, again, the premise of the market is made up of people, individuals. Joe Bloggs has got a good reaction here, lesser reaction here, lesser reaction here. Are we going to place the same order roughly around that area? This is kind of how I think about it, and probably not as we get less and less significant as we go on, i.e. increasing pressure into that significant zone before, hopefully, a decent move to the downside. That's why I'm very pernickety and very particular that I want to see this tag of that zone, and we've not got that yet. Not got that. And that's it. So relatively quiet. A few of the ones yesterday I didn't get involved in. Swiss yen, for example. But, you know, that's trading. That's trading. So, Aaron, I know you're probably sleeping, but a nice little break to the downside. I presume you've hit TP1 here. Waiting for that swing to continue with that trend. But yeah, for me, it was just not quite enough for me. Not quite enough for me on Swiss yen. Very close to, but if my gut tells me no, then I don't take it. I don't take it. Okay, anything you guys want me to look at before I head off? So as I said, unless I think probably another no trade day for me today with Bitcoin. Where is it? Here. Maybe. Unless it gives us a really nice complex corrective, but I just can't see myself taking that trade on a retest. And I'm happy to have EURUSD, running relatively risk-free. I think it's probably relatively risk-free. So yeah, quite happy. No, nothing you guys are looking at, want me to look at? US dollar down. Yeah, I probably have to sit myself on the fence with the US dollar. But I think if we get a decent 4 hour here, that kind of breakout from here, nice little consolidation, breakout, steady state corrective. If we get something like this, which closes in a few hours, with you'd expect a bit more volume coming in because London obviously is opening up, then dollar continue to the upside. I just don't really like these two bars, because it's a little bit of smaller time frames losing a slightly bit of momentum. But then we dissect it on the 4 hour. Again, from a daily perspective, I don't really like to see this. But if you dissect those bars, we're in this period which doesn't look too bad. The other option is potentially this for a deeper corrective. So I don't really like where the chart is. I don't. But I haven't liked where the DXY has been for a little bit of time. We've had a nice corrective. We could be potentially kind of doing this where you break out from it, have a little bit of rangy price action, then you continue, which is not too bad. I normally like to see that kind of rangy and consolidation when we get a pullback like this. If you're into your pullback, you break through a little bit rangy, and then off we go to the upside. That's something I like. Not quite what we're having here. So I'm not going to go and say I think dollar's strong unless I get a reason to long it. But even then, I wouldn't be massively comfortable with it, I wouldn't be massively comfortable with it. But you're going with that trend, so it would make sense. And with the risk-off nature as well, it still would make more sense buying the dollar, obviously, than selling it. That's what I'll say. But we just wait for that reason to enter, I would say, from a personal standpoint. So I'm kind of on the fence, but a little bit towards dollar longs. All right, any more questions? I'm here at your service. No worries, mate. No worries. Any other questions on anything? Let me know now. Or forever hold your peace. Thought you were typing there, David. No? Okay. Okay, I'll just let you type. Yeah, no worries. All right, guys. I appreciate you coming on the stream, and I'll see you all in the morning. Remember to trade safe. Peace.